Meta's Q3 earnings are out. They beat estimates. I used to be a shareholder in Meta. I bought it right after the first crash, kept adding to it on the way down and sold it probably somewhere around here. And despite the recent beat, I still think Meta is not a buy right now. But first let's get into the numbers. Revenue is re-accelerating at 23% while costs are staying down. You gotta remember they're still benefiting from the massive layoffs they had, so expenses are way lower. And also users are increasing at a record rate again, 7% year-over-year growth. And even Facebook still growing by 5%. We can overall see Meta is not a dying business like many thought a year ago. It is still a growing business and it has a lot of wide mode businesses. Also, what is very nice to see is that ad impressions are still growing. They were growing at 31% before, and I didn't think they could keep this up, but they managed to keep it up. This has to do to one, more users being on, and also them including more ads. For example, on Instagram Reels, they're currently trying out to show a little ad on the bottom of a video sometimes, not only ads in between. So they're increasing the amount of ads shown to more users. They're also stabilizing the price per ad. It was falling at 15% before. In 1 year, it will probably be positive again. When we look at this quarter, overall, it was a great quarter. The headcount is still down 24% year over year. And free cash flow is also back, 13 billion in free cash flow. Of course, that doesn't include stock-based compensation, where we come to one of my issues with Facebook right now. Because somehow, despite cutting headcount by 24%, share-based compensation increased. I'm not really sure how they're doing this. Employee at Meta get an over 25% raise in 1 year? That would seem very extreme to me. I'm very worried about this one. Overall, we can see share-based compensation, they need to get this under control. It just keeps on growing. While yes, revenue is growing as well, this is very concerning. It just dilutes you a lot. 13 billion per year right now. I'm not really sure how they're not managing to get this lower with so many layoffs. This is one of my critique points. Overall, capital expenditures are flatlining. They're not investing that much anymore. They're still, of course, investing into new data centers and AI. That is mostly to get better recommendation. Meta is currently winning because they're investing more money into the recommendation system. And trust me, they will not let you forget that they're investing into AI. The earnings call is hell. They said AI probably 100 times. I didn't keep count, but oh my god, it is too much. So with free cash flow returning and capital expenditures flatlining, where's that money going? They're building up their cash reserve. They heavily depleted that cash reserve to buy back shares. They're not buying back shares anymore that much, which is good in my opinion. They bought back a lot of shares around here where it was really cheap, and now they stopped buying as many shares when it's not that cheap anymore. I guess they learned their lesson from buying a bunch of shares when the stock was really expensive up here, but that also means you're getting diluted again. They're buying back so few shares, it's not compensating for stock-based compensation anymore. Shares went up quarter over quarter. Year over year they're still down, but overall, they're not buying back shares net right now. Reality Labs losses are also stabilizing. We can see Zuckerberg's dream is not working out. I know it's still an investment in the future, but Reality Labs is not new. It should slowly generate some sort of revenue. The losses are still way too high, and as I said a year before, if you invest in Meta, ignore Reality Labs. Write it off as an expense that will keep being on the business. Do not expect any money from it. While I usually take the trailing 12-month cash flow to value stocks, this one is a bit different. Meta had the huge dip here, and I think you should account for that by using a different number. I think around 45 billion in free cash flow is a more realistic estimate for what the business is gonna generate. Minus the 13 billion in stock-based compensation, that's around 31 billion in free cash flow. That's around $11 in free cash flow per share, and we can see that is not a great multiple. Now, if we value Meta with those 11 free cash flow per share, yes, growth last quarter was high, but I want to be conservative. That high growth comes off a very low benchmark where growth was basically non-existent. And overall, Meta is a very cyclical business. Ad spend in a recession is usually the first thing companies cut, so I think 15% for the next 5 years and 12% afterwards is a fairly conservative estimate. Maybe a bit too conservative, but I want to have a margin of safety. 10% discount rate, 16 multiple, that would give an intrinsic value of $214, 26% off today's value. Now, of course, it could go better. For multiple reasons, maybe they cut Reality Labs finally, which we're probably not gonna do, so don't expect that. Or growth stays high. If we count with 20% and an 18 multiple, then we would come to 298. Where in this case, yes, it kinda is close to the current value, we would get a 10% return, but that is a very optimistic scenario. Stuff can go wrong with Reality Labs very fast. Zuckerberg only cut spending on Reality Labs because the market pressured him to do so. He has the control in the company. He owns the majority of the voting power. If he wants to do something, he will do it. So what if it goes even worse? Maybe only 8% and 5% growth, 15 multiple, we would come to $113. Now that is very unlikely in my opinion. I think it is somewhere around the 15 to 12%. That sounds like a more realistic estimate to me. A year ago it was different. Yes, Reality Lab expenses were there. The valuation was so low that the main business generated enough cash flow to warrant that. But now, it is just not the case in my opinion. It is a stock I would like to have in my portfolio again. If it crashes again, I will definitely buy it, but right now I'm sitting on the sidelines and won't be investing for now. What do you think about Meta? Write it down below. Have a good day.